The SPY finally pulled back today. It's been on a powerful move. Is this the beginning of the end? Well, it might just be the beginning of the pullback that I mentioned to you yesterday that typically precedes the extremely bullish week of the election. So about a week or 10 days before the week of the election, in the last two election cycles, the market pulled back. It prepares to take a little bit of risk off the table going towards the election because the election presents to Wall Street some degree of uncertainty of the outcome. And so it takes a little risk off until the week of the election, which typically produces a rally, or at least it has in the last two cycles, the last two election cycles. Well, the SPY gave us a pretty bearish candle today that we have to talk about. That's a bearish engulfing candle. So it means that the opening and closing price was higher and lower than the previous candle. A bearish engulfing candle changes direction. The direction that the previous candle was pointed was up. This one changes direction, which means that we're likely to see more downside going into tomorrow and even going into the next couple days. No guarantee, but that's typically what that candle represents. I'll tell you the next area where the SPY might possibly bounce, that's going to be around 576. We broke an area of support today at 580, and it looks as if the next target to the downside is going to be 576. Now, today's market was actually relatively easy to trade because the bulls were not putting up a fight at all. Bears had dominance right out of the open. Every 15-minute candle made a lower low today, and so it wasn't hard to pick the direction and go down with these markets. I'm going to go over a couple events that we're keeping our eye on this week, and I'm going to show you a couple charts, a couple companies that are reporting earnings. We're going to talk a little bit about the fundamentals and what the technicals are telling me and whether or not there is a risk opportunity in these two plays. This is the Stocks with Josh show. I appreciate you joining me today. If you know I'm traveling, I'm on the road, but I'm going to try to make some videos as well as stay connected in the Stocks with Josh Discord. I gave a pre-market overview on a couple companies this morning. Tomorrow I'm going to do the live trading with the VIP members, and we'll be looking to make some money. I believe initially at the moment we're probably going to be playing some stocks to the downside because of that bearish ugly candle that we got today. But crypto is holding up pretty well. It did come up off of its highs, but I think that there is an opportunity to potentially buy the dip here. I am welcoming the pullback on some of my favorite alts because I believe that the market is going to rally in the month of November. That's just my personal conviction at the moment. But I'm going to take you into the SPY and tell you when it is that I would become more bearish on this 2-year rally that all the bulls and the bears have underestimated. That's right. Neither the bears nor the bulls saw how powerful this rally was going to be in 2024. And as I am telling you, based on some of the charting that I've given you on the SPY, I don't think the up move is over. I think this is just a pullback before the next leg up. But I'm going to take you into the SPY so you guys can be reminded of where I see us potentially hitting in November and where should we begin to think more bearishly if we cross the threshold to the downside. I'm going to give you that threshold. Let's go check it out. Let's go look at the SPY chart. Okay, guys, we're looking at the daily time frame, and I want to remind you guys that we've got this always bullish ascending triangle pattern that we had a very clear breakout of. And we back tested it right here, and we shot up like a rocket over the last week. Now today's candle, this big red bearish engulfing candle, is bearish, and it's telling us that we are likely to get a little bit more of a pullback. 580 was support. We broke it right here at close today, and I think that we're likely to come back to 576 tomorrow. But when should we panic? When should we believe that the up move is officially over? Well, I'm going to tell you guys that typically the only way to cancel this pattern would be to get a break to the bottom of its support level, which is this bottom yellow line, this bottom yellow trend line. If we were to come back here and cross this line and then open and close a couple daily candles beneath this line, well, that would be confirming a bigger breakdown away from the up move that this structure points to. I want to remind you of the opportunity of this up structure. You take the distance of the mouth of the ascending channel and you add it to the top, and that gives us our potential future target of 6 to 620 on the SPY. So at the moment, even though we're pulling back a little bit, there is plenty of room higher, even after we come back and possibly bounce off of this ascending line of support. So I wanted you guys to have the overall narrative is still bullish, even if we get a couple days pulling back before the next leg up. And you guys have heard me say this phrase many times before, that I will be buying the dip. This market hasn't broken down. It's only repeatedly giving us new all-time highs. It was worth buying the dip in August. It was worth buying the dip in September. And I believe it'll be worth buying the dip in October. And I believe the strongest month of the year is ahead of us right here after the election. And it's going to be November. And I believe in that month, we very likely will see our 600 to 620 SPY. But I also want to tell you that I give you these charts, I give you these patterns, which give me a sense of confidence to invest in this market. And those have served me well as I've continued to buy those dips and enjoy the all-time highs. But I also gave you guys the potential of the breakdown. I will always be watching the patterns that I give you. And if we break that bottom supporting ascending trend line that I just showed you on the SPY, it means that we've got to step back from the table and realize that it might have changed. It might not be a good idea to buy the dip on an expensive market that has exceeded the expectations of the bulls in 2024 by 20%. We are 20% above the analysts' consensus of where this market was going to hit this year. So at some point we will cool off, but I believe personally that that's likely to be in December. I think November is still going to be a big month, and I think that any dip that we get here in October is potentially going to be a good opportunity to buy. That's the way I'm approaching these markets right now. Let me remind you guys, the biggest day of this week in the market is going to be Thursday, because we're going to get another report, the initial jobless claims. This is going to absolutely move the markets. I'm going to remind you that the Fed, when he pivots from inflation, he is pivoting to unemployment. And so anything that surrounds jobs that are being lost or gained is going to be of critical importance to him, because he has pivoted from inflation concern to unemployment concerns and a slowing economy. And so if it turns out the unemployment is not as bad, well, then he won't cut as aggressively. But if that number comes out pretty poorly, then he will cut aggressively, and the markets will like that. And here's the key thing I wanted you guys to take away from this both today and on Thursday is don't assume that because the data is bad that the market won't like it. If the data is bad and they believe that it will give an incentive to the Fed to cut, the market could respond to that bullishly, foreseeing that the easing will benefit the stocks and we can continue in a bull rally. In addition to that, we have the retail sales report on Thursday, which is going to tell us a lot about the strength of the consumer. Okay, this week, we're also going to look at a couple companies. I'm going to take you guys into the charts. We're going to talk about ASML, which was scheduled to report earnings tomorrow, but they had a mishap, a data leak on their earnings today, and that caused the stock to absolutely capitulate. The stock dropped 16%, dropping $141, and specifically on an increase of 1,000% on trading volume. So what happened, from what I understand, is they had a glitch on their website, and the earnings data, which they were going to release tomorrow, accidentally got revealed today, and the market didn't like the data, and it sold off the stock, and it sold it all the way down below a historic support level, actually making a new lower low. And if you look at the pattern on the chart, we've got a series of lower highs and lower lows, and whenever you have that, you have to understand that's a stock in decline, okay? It's not going to be a V-shaped recovery. And so on ASML, I want to be cautious. I believe there's more room to the downside, and I believe that was technically confirmed today. And I'm going to give you a new target. Now, it doesn't mean that we won't get a dead cat bounce, but the chart and the breakdown of the technicals points to a lower low. which at this point would be a move down to 686 on ASML. So I don't see opportunity in ASML, even if there is a dead cat bounce. I believe ultimately the stock is clearly revealing to us that it's on a downtrend. And in addition to that, the CEO said that even though there was a ton of artificial intelligence upside potential, he said that there was actually a concern about the rest of the business lagging and not recovering as quickly as they had hoped. That is always what the market wants to hear, is what is the forecast, because you got to remember these stocks trade on a forward PE, and if that forward expectation isn't as good as people think, well then they're going to recalculate, and the recalculation is going to lead to a sell-off, and that's what we saw today. So to be clear, I see a technical breakdown of support on ASML, and I give it a forward prediction of hitting 686 in the course of time. Now, we've got another semiconductor company that's reporting, Taiwan Semiconductor, TSMC, TSM here in the States. Now this stock, now here's the case I want to make for you guys because I'm bullish on them. And they have a track record for beating earnings expectations, but we've got to stop and pause and consider the macro environment that we're in, as well as the election that's around the corner, and all the factors that are going to influence this stock right now. First, they're up 84% in 2024 alone. So this could be a moment, even on good earnings, this could be a moment where there would be some profit taking, especially because they could get swallowed up in the macro environment that they're in, where the market is taking some risk off right before the election. These guys are reporting earnings on Thursday. Now, the last 4 quarters, they actually beat market expectations by 7.8%. That's a very high number to outperform top expectations for an uptrending stock. Now, Zacks, though, they gave this a rank of 2. Now, they've got a system where they rank it 1, 2, or 3. 1, if they gave it a rank of 1, it means that they're very confident that they're going to beat market expectations again. At the moment, Zacks' rating is a rating of 2, which means that they're slightly less confident that they're going to beat expectations this time around. Now, the bullishness that TSMC has going forward is that they've got deep partnerships. They're the #1 supplier for NVIDIA and AMD. However, there was many that would argue that the rising US-China tensions can still outweigh the bullish narrative surrounding this stock. But let's examine the fundamentals and go to the chart. From the fundamentals perspective, it is cheap compared to its peers or versus its peers. TSM's forward PE is sitting at 24x right now, and others in the same industry is at 26x. And so if they do beat market expectations, there's absolutely room for this stock to pop. All right, here's the chart for TSM, and there's a couple notable patterns we need to look at. We have an ascending triangle similar to the SPY, where we've got numerous touches that validate this charting pattern. Now, the area that we need to break above is this 192.35. Now, if we get above 192.35, and if the market likes what it hears Thursday, and they have good earnings that beat expectations, this will immediately move to 207. That's my prediction. But if we take the mouth of this ascending triangle, it gives us a larger long-term target of $274. And again, I want to remind you that TSM is in a similar boat to the SPY, which means that if in the course of time it breaks below this supporting ascending line, that's when you have to begin to worry. So eventually we could see a price cross through this ascending line, and then we'd get a couple candles that would open and close beneath it, and then that would tell us that the up move at the time being has been canceled. Right now, this is absolutely in a bullish trend, and TSM is bullish. Now, we do have today's candle, which is a bearish engulfing candle, very similar to the SPY, and I can expect that we would see some movement back and possibly another touch of this ascending line. But at the moment, between now and Thursday, I would view that as potentially an opportunity to go long and to buy the dip on TSM. And if the earnings are good, like I said, this will shoot straight to 207. Those are our stocks on watch. You guys can find me in the Discord trading live tomorrow. I'll leave a link for that in the top pinned comment. We're going to be looking to make some money on the direction of these markets Tomorrow, my expectation is that the markets are going down, but we will see, because those are some ugly engulfing candles. Like Nvidia came down today, but Apple went up. So you're always going to have your stocks that go against the grain. We're going to be looking for both opportunities. Guys, let me know in the comment section whether you're going to take some risk on TSM if you see them beating market expectations for a 5th time, or whether this time's going to be different. I'm looking at them with some interest. I think that the options are actually not terribly overpriced right now. And so as far as the cost of the options go, this is the type of play that I would have some interest in perhaps taking a little bit of risk with. But let me know what you're going to do in the options. I'll give more details on these in the Stocks with Josh Discord. Appreciate each and every one of you. Like I said, I'm traveling, but I will stay connected. We'll see you in the next video. Hit that like and subscribe. Take care. Bye-bye.